Well, another day, another company which comes up for an IPO. This time around, it's drone maker Ideaforge of Three Idiots fame, just filed for an initial public offering with the market regulator SEBI and is set to raise around 750 odd crore. About 25% stake will be offered through secondary and primary share sale. It is a company backed by likes of Qualcomm, Infosys, Florent Tree Capital Partners, co-established by former Blackstone executive. Also, a fact check there. With this, Infosys would eye a multifold jump in the value of its investment in the drone maker, while the second largest IT major is not amongst the selling shareholders in this issue. The notional value of the investment in the company would jump roughly to 6.3 times in a span of 6.5 years since it's first invested in the company. Let's get to know what about this company first. Now, it's founded in 2007 by IIT Bombay graduates Ankit Mehta, Ashish Bhatt, Rahul Singh, Vipul Joshi are amongst the some names in the management out there. Ideaforge overall has 15 years of R&D experience and more than 20 patents. That's a fact. Ideaforge primarily caters to customers with applications for surveillance, mapping and surveying. Its customers include something in the line of armed force, central armed police, state police, disaster management forces, forest departments, besides other civil customers. The product portfolio of the company consists of both hardware products as well as software solutions. Also, a little bit more about this company. Presently, there are no listed companies that exclusively undertake the manufacturing of drones. 10 key highlights that we'd like to talk about this IPO. First is the size. Initial public offering by the unmanned aircraft system manufacturer comprises of offer for sale and fresh issue. The offer for sale of the IPO will entail around 48.6 lakh shares, which at the upper end of the price band of rupees 672 would result in an offer for sale component to an extent of around 327 odd crore. The fresh issue component of the company will entail issue of around 35.7 lakh shares, which at the upper band price band will of 672 would result in an offer sale component to an extent of 240 odd crore. Therefore, the overall size of this IPO will entail issue of around 84 lakh shares, of course, with the upper price band to an extent summing up to 567 odd crore. Also, now let's understand the offer period and few important dates. Anchor book, June 23rd today. Opens on June 26th, closes on June 29th. These are some there. Price band, that's another one that you need to keep in mind now. At the lower side, it's 638. At the upper end, it's 672. Now, let's see how the book has been allocated here. Not less than 75% of the offer shall be available for allocation to qualified institutional buyers. Not more than 15% should be available for allocation to non-institutional investors, and not more than 10% of this should be available to the retail individual bidders. Objective of the issue. How does the company want to use the issue? Now, the proceeds for the fresh issuance to the tune of around 50 odd crore will be utilized for prepayment of certain indebtedness availed by the company, rupees 135 towards the funding working capital requirements, and around 40 odd crore for investment in product development and general corporate purposes. A book running lead manager is also something that you'd like to know. JM Financials and IIFL Securities are the BRLMs to the issue. Some of the key strengths that we like to highlight. First, mover advantage, providing an opportunity to know the market. That's the first highlight. Deep understanding of the technology, product, and highest experience in the field. In-hand approvals and referrals with approved products is another one. And the commercial setup overall, from the procurement, manufacturing, bidding, service, and after sale, holding a great advantage overall in the entire value chain. Some of the other advantages that this company is sitting with is a ban on imports, PLI, and the prevailing anti-China sentiment. Talk about the concerns. That's another highlight. Rising competition from domestic as well as international players. The background of promoters in light of the various past and ongoing litigations. Also, the business working capital intensity, that's also one of the highlight out there. Now, let's address the financial summary of the company. The company has witnessed significant growth both in terms of revenue as well as EBITDA margin during FY22, as indicated. Additionally, the operating margin remains at a satisfactory level, surpassing that of its competitors. FY23, the company achieved a adjusted margin of around 45.8% and a PAT margin of around 17.2%. Well, with this, it's a wrap. Thank you so much for tuning in.